Have you ever wondered how a single decision in Riyadh could ripple across every continent, from Wall Street traders to Indian highways to European factories? Because right now, Saudi Arabia, still the undisputed heavyweight of the oil world, is making moves that could change the entire global energy balance. This isn't just another OPEC meeting headline. It's something deeper, more strategic, and potentially far more disruptive. And to understand it, we need to go inside the oil power game. Welcome back to Beyond Binary, where we decode the world not in black and white, but in systems, data, and the real politique behind them. Let's start with something that shook the world not too long ago: the oil production shutdown. If you remember, during the last major oil shutdown, global supply chains nearly seized up. Gas prices soared, stock markets dipped, and countries started scrambling for emergency reserves. But what exactly was that shutdown, and why did it matter so much? A shutdown in oil terms isn't just a factory pause. It's when key oil producers, often led by OPEC or individual nations like Saudi Arabia, deliberately cut or halt production. Sometimes it's planned, like maintenance or quota management. Other times it's political, designed to send a signal to the markets or to gain leverage in negotiations. And during the last big one, Saudi Arabia and Russia, through the OPEC Plus alliance, decided to drastically reduce output. The goal was clear: push oil prices up. After all, with falling global demand post-pandemic and rising U.S. shale production, the market had become flooded. Too much supply meant lower profits, and for oil-dependent economies, that's a nightmare. But what followed was chaos. Refineries ran below capacity, transport and manufacturing costs spiked. Countries dependent on imports, especially in Asia and Europe, were hit the hardest. Inflation rose, and energy security suddenly became a hot-button issue from Brussels to New Delhi. That shutdown reminded the world of one uncomfortable truth: even in an age of renewables and electric vehicles, oil still runs the show. Fast forward to now, and Saudi Arabia seems to be preparing for a new kind of play. The kingdom's recent moves suggest something far more calculated than just price control. We're talking about a complete reshaping of the oil market structure. Let's unpack that. Over the past few months, Saudi Arabia has been extending voluntary production cuts. It's keeping output significantly lower than its full potential, despite prices hovering around levels that should encourage more production. That's puzzling, right? Why would the biggest oil producer not pump more when prices are high? Well, that's the genius and the gamble. You see, this isn't just about short-term profit. It's about long-term power. By tightening supply and keeping prices stable, but high, Saudi Arabia ensures that other producers, especially those with higher production costs, like U.S. shale operators, struggle to remain competitive. At the same time, it boosts the value of its national oil company, Saudi Aramco, which remains the crown jewel of its economy. Higher oil prices mean higher revenues, which directly fund Crown Prince Mohammed bin Salman's Vision 2030, a sweeping plan to diversify the Saudi economy beyond oil. In other words, they're using oil power to buy their way out of oil dependency. And that's where the real twist lies. While the rest of the world debates the timeline of the green transition, Saudi Arabia is quietly playing a double game, profiting from fossil fuel dominance today while investing those profits into technologies that could dominate the energy market tomorrow. Hydrogen projects, futuristic smart cities like NEOM, and major stakes in renewable companies. These are not side ventures. They're the foundation of a post-oil empire. But this strategy isn't without risk. The longer the supply stays tight, the more the world accelerates toward alternatives. Every price spike makes electric vehicles, nuclear power, and even biofuels look more appealing. And if global demand starts falling faster than expected, Saudi Arabia's leverage could evaporate. So why do it now? Because the timing is perfect, or at least that's what Riyadh believes. Global tensions are high. The Russia-Ukraine conflict continues to distort energy flows. The US is facing political gridlock over domestic energy policy. And China, though slowing economically, remains the world's biggest oil importer. By acting decisively now, Saudi Arabia positions itself as the one player that can dictate both the pace and direction of the energy market. But here's where things get even more interesting. This time, it's not just about the price of oil. It's about control over the system. Saudi Arabia is pushing to redefine how oil is priced, traded, and even denominated. For decades, the US dollar has been the backbone of global oil trade, the so-called Petrodollar system. But recently, Riyadh has been exploring deals to sell oil in other currencies, especially the Chinese yuan. If that shift gains traction, it could shake the foundations of the global financial order. Imagine, oil priced in multiple currencies means less demand for dollars, weaker US leverage in international finance, and a more fragmented global market. That's not just an energy move, that's a geopolitical earthquake. Now combine that with production cuts, economic diversification, and new strategic partnerships with China and Russia, and you start to see the bigger picture. Saudi Arabia isn't just adjusting its oil output, it's repositioning itself in a world where energy, technology, and geopolitics are merging into one battlefield. And make no mistake, the effects of this will touch everyone. For consumers, it could mean persistently high fuel prices, even in times of moderate demand. For governments, it means tougher inflation control and more fragile supply chains. And for industries, especially in energy-hungry nations like India, Japan, and South Korea, it's a wake-up call to accelerate their energy independence. But perhaps the biggest effect will be psychological. The world is slowly realizing that the so-called post-oil era is still a long way off, and that those who control the taps still control the tempo of global growth. Now, the question isn't whether Saudi Arabia can pull this off, it's whether the world can adapt fast enough to reduce its dependency before the next shutdown hits. Because, make no mistake, another one is coming. Whether for economic balance, political pressure, or simply strategic signaling, production cuts and temporary shutdowns are now a feature of the oil market, not a bug. And when that happens again, everything we've just discussed, supply, prices, currencies, geopolitics, will come crashing into each other once more. So the next time you fill your car, or read about inflation, or hear a debate about renewable energy targets, remember, behind the scenes, this isn't just about oil, it's about power, economic, political, and systemic power. And right now, Saudi Arabia is holding more of it than ever before. In a world racing toward electric cars and green grids, it's ironic that black gold still drives everything. But that's the paradox of our age. The energy transition is happening, yet the old order refuses to fade quietly. As the global system rewires itself, one truth remains: energy isn't just fuel, it's leverage. And in the coming years, whoever controls that leverage won't just shape markets, they'll shape the world. This is beyond binary. Thanks for watching, and if you found this breakdown insightful, make sure to like, share, and subscribe. Because next week, we're diving into how the US and China are competing for the next energy frontier, not in oil, but in minerals. Until then, stay curious, stay analytical, and remember, nothing in geopolitics is ever as simple as it seems.